Mira Business FM, Dubai's home of business radio.
Good afternoon and welcome to Midday Majlis with Sahar Mushtaq on Mirror Business FM, where conversations connect and ideas come alive right at midday. Before we dive into today's discussion, don't forget that you can catch us live on Mirror Business FM, streaming now on YouTube, Rumble, Facebook, and Telegram. Our podcast is also available on all your favorite platforms, anytime, anywhere. And today, joining us on the show is Savannah Severn, a seasoned real estate professional with experience across both the UK and the UAE markets. She brings over a decade of expertise helping clients buy, sell, and invest in property. Welcome to the show, Savannah.
Thank you for having me, Sahar. It's a pleasure.
Now, Savannah, we know that Dubai is widely recognized as a Tier 1 global city from an investment perspective. What does that status really mean, and why does it matter for investors these days?
So, a Tier 1 city was ranked and formulated by a Japanese company called the Mori Foundation. Now, what that does is they measure the magnetism of a city on a global scale. So, historically, you'll have the likes of London, Paris, New York, Shanghai as the global players. And Dubai, as of recent years, since 2024, has been deemed as a Tier 1 city. Actually ranks 9th in the rankings. London's number 1, but over recent years has actually been in decline. So what it does, it measures it over 6 metrics: cultural interaction, livability, the environment, the economy, research and development, and the last one is, I think it's cultural interaction. So it measures it on these 6 key metrics, and what that means is it's competing as a global player. Now, what's very interesting from an investment perspective is that Dubai is only 25 years young in real terms. And where investors are noticing Dubai competing with all these other Tier 1 cities who have been around for
around the world for many, many years.
For over hundreds and hundreds of years. Where it highlights an opportunity is that Dubai isn't priced as a Tier 1 city yet. So you've got all these international players are starting to catch on that whilst it's competing with these other Tier 1 cities, it's not priced there yet. So you've got a lot of international and foreign direct investment coming into the city to capitalise on where the current prices are sat, to reap the benefits as time does its heavy lifting, as the government introduces many economic agendas and social agendas to keep boosting the city's global recognition. And it's a really exciting time for Dubai and the UAE, as well as where investors can come in and where they can potentially exit later down the line.
Right. And as we know, the UAE property market attracts a lot of international buyers all the time, and the rules and practices can be very different from other countries. Now, we know that you have experience working in the UK and now here. So from your experience, what's the biggest difference between buying property in the UK versus in the UAE?
I arguably think it is down to 2 things: the pace and the mindset. Things in Dubai and transactions and the processes move extremely quick. The UK, for example, where I've worked predominantly, it's a lot slower. It's much long-term mindset, quite a lot more emotional when investing there. But Dubai is very quick, very transactional, very strategic. And it's where a lot of the global opportunistic investors are coming. So that's the main difference, definitely the pace of the market and the way it moves.
That's very interesting. And I didn't really realize the processes were that different. So it is really important to know the local rules exactly before you jump in, right?
100%. Anyone looking at Dubai, it's a foreign thing to look at a different market. And when you're so used to the way things work in your own home country, you're conditioned to understand your own rules and regulations. Unfortunately, post 2008, Dubai transitioned into a very transparent and very regulated market. It wasn't always like this, but the government knew that if they needed to compete with other global cities and really position themselves to be in the top, at the top with all the top players, that they had to introduce these. So you've got various reforms like escrow accounts, the code registration, everything is digitally recorded for everyone to see. It's super transparent. Whereas other markets, they're a bit lagging behind. Dubai's very, and with the
Advanced
UAE,
when it comes to that.
very forward thinking.
For sure. And do investors think differently in London compared to Dubai, as they're both very popular cities? And if so, then how?
When looking at the two, London tends to be about long-term capital preservation as opposed to quick, short wins. It's a lot more emotionally led, and London and all the other big cities in the UK, it tends to be you have two different strategies that you could potentially employ. It would either be buying the worst house on the best street and renovating, and that would be your
Which might be a lot of work.
yes, and that would be your flip in the UK. Or you would buy a property and just rent it out. Here in Dubai, because it's so new and it's in its infancy, there's a lot more strategies that you can employ. However, you have to be extremely strategic when executing things here because there's so much choice, so much competition. So you have to be even more so selective in Dubai versus the UK.
Wow, that makes a lot of sense. And how different is it working with someone buying a home versus someone buying purely for investment purpose?
Very, very different. So I speak with an array of clients from all around the world on a daily basis, and everyone has different priorities. But when it comes to buying something for personal use or an end user, so to say, versus someone investment, the main crux of it is that one is emotional, and their priorities are completely different to someone who's seeking the maximum amount of returns in the quickest space of time. People who are buying a house, their priorities is how close is it to my child's school? How quick is it to my work? Is there green spaces? Because that's what I crave as an end user. Is it close to a nice mall that I like to go to? They're the priorities
Right.
that you look to. Investors tend to think
Differently.
differently. They want to know, right, what's my entry point and what am I potentially exiting at? They also will think about what's coming, the malls, schools, because that's what's going to attract the end users, their end clientele, the person they're going to rent it to, the potentially person who they could potentially be buying it off.
Exactly.
So they also have to think about that, but it's a lot less emotional. They don't tend to look at the glossy brochures or care about the surface level conditions as much.
Right. And are home buyers more emotional in their decisions as compared to investors?
Definitely. I've got clients, if it's purely investors, that will not even look at what the project looks like. They care about the data, the comparables, and what their return on equity or return on investment will be at the end of the day. If it makes sense from a financial perspective, they will go ahead. They're not necessarily thinking about what the community has or how close it is to the shops. That's not their priority. Their priority is getting in and capitalize on a low price, and they want the highest yield and the highest returns. But you also do have to explain to them the emotional side. When you're buying a house, you have to, there's always, no one wants to buy a house and it's not going to make money. You're not going to buy a house.
True.
You always have to, when it's emotional, that you follow the emotion, but you justify the purchase with the logic. So you always have to look at that element as well.
And so, yeah, the emotions definitely play a huge role there. And I think a lot of listeners will relate to what you've just said that, making those right choices is the most important thing. Like, you've got to, whenever you're thinking of buying a house, that's for personal use. You, of course, do think of places that are close to you, for example, schools where your kids are learning, hospitals, for example, as well.
Exactly.
And you've also mentioned the green spaces, which are really good for our mental health as well and our
Yes.
well-being. And now moving on, what do first-time investors in Dubai usually get wrong?
First-time investors, the two things that really stand out is that they look for the lowest price and they also follow market hype. Now, buying 5 cheap units doesn't necessarily mean that it will outperform one great one. You have to look, as I mentioned, beyond the surface level conditions. You need to look at the demographic who's going to be renting, what's going to be coming into the area. You need to look at all of these fundamentals, the developer you're into, the quality of the developer when they're handing over.
Yeah, that's a great point.
And a lot of people don't do their due diligence when looking at the market. And without that, it carries a lot of risk. Because you can see there's so much choice here that it can be very overwhelming for someone looking at the market first time. That's why I would always recommend speaking with an advisor who can weigh up the pros and cons. Just like an end user looking for a home, they might have an idea of the community that they want. If they're not familiar with Dubai and the schools and what actually meets their requirements, there might be another community just down the road that has better value, that actually works even greater for them. So it's just educating clients to help them avoid the mistakes that a lot of first-time investors make.
And do you see people making these mistakes all the time?
A lot. And it's mistakes that can actually be avoided. A lot of misinformation and hype. You do have a lot of agents out here who have come out on a whim, and it's all about quick wins. What can I push and how quickly can I get paid? And that's not what advisors do. Advisors will sit down and educate people and spend their time. They wouldn't even necessarily,
And they would care about the long-term planning as well.
It's all about long term, and that's what I've been used to in the UK market, building up relationships over a long time and working with people on trust and transparency. My whole focus as an advisor isn't selling. I hate that term of being a salesperson. It's much more about education. My first meetings with a client, we wouldn't even look at a product, wouldn't even talk about a developer. We would talk about the process from start to finish, the pros, the cons, the risks, the entry points, the exit points, different strategies. It's all about organizing and collating this into very structured segments for the client, because they might think they want something, but it's not actually what they want when you really break it down into different fundamentals and metrics that go into an investment.
Right. And sometimes it's also the look of the product as well that really kind of like gets their attention and they want to get it despite looking at the location of where it is, right? Now, that's also something because when you're coming, for example, let's say from Canada or from North America, South America, somewhere, you don't know the GCC that well and where exactly are the locations of these new developments, right? They're happening all the time. This is actually happening all the time. So do you see that happening as well?
I see it every single day. I'm a big believer in the fact that brochures do not deliver buildings, developers do. So a developer, when recommending any investment, I'll always break it down into 3 core pillars. And the first one is developer. Now, there's over 200 developers in Dubai, and you have some great developers and you have some average developers. And if you don't understand and have the experience in how to establish what a great developer is, then that carries so much risk. We will go into such great detail in which developers we work with. There's over 200. We probably only recommend about 10 to 15 that mitigate any risk from a risk perspective. And we will look at their occupancy rates, the investor end user split. We don't want a building just full of investors. That's not going to be good for you as an investor because your competition is going to be significantly heightened. The materials that they use, do they hand over on time? There's so many fundamentals that go into the recommendation for a developer that you have to do your homework. You have to have an advisor who can educate you on what a reputable developer looks like. But even though you have that reputable developer, they might be launching in a location that
Absolutely.
is too mature. You're not going to see the 8-10% yields that were once in that area because you're unfortunately too late to that area to see that. It's already at its peak. So there's a lot of due diligence that has to go into it, and buying just from a brochure, it just doesn't cut it in this market. 5 years ago, post-COVID, you could have picked something potentially blind and you would have done well because of where the market's at. But that margin of opportunity day by day is increasingly narrowing, and you have to make sure you tick all your prerequisites prior to recommending anything.
Absolutely. Makes a lot of sense. And where do you see is the smartest money going in the UAE market right now?
So Any market, any investment, any commodity, you always want to look at the supply and demand metrics. We don't want to, apartments, for example, account for around 85% of the market share here. Villa and townhouses is a much smaller segment. So that's where I would be parking my capital, is because it's in demand. You've got loads of families moving here. There's a economic agenda, from the Dubai government, because there's such a shortage of schools for the amount of families. So you want to pick an asset that caters for the demographic and the demand that's coming to Dubai. If we're then looking at another potential asset class with apartments, studios and one beds, they dominate the apartment share. You have to be selective. So it's not to say they won't perform well, but 2 and 3 beds. If you look at the inventory of a project, you'll typically have 10 2 beds, 5 3 beds, and hundreds of studios and one beds. So there's a lot of supply within that particular segment. So I'd focus on larger unit types as well. And then if we're looking at prime real estate, I think waterfront in any city, any region will always hold its value. Dubai, 8% of waterfront. That includes canals, beachfront, islands, but
Those sites are always popular.
they're always popular, and exclusive beach access, for example, is less than 0.5%. So if you can focus on rare segments that can withstand the test of time, that's where you'll make strategic entry points and preserve long-term value. I think that's really, really important. A lot of people say, yes, Dubai's booming, yes, Dubai's this, but you have to be extremely selective with where you go and where you
Very
enter
careful.
into. Of course.
Absolutely.
Every investment's a risk, but it's how you carry out
Approach it.
of course, and how you mitigate them. So we will reverse engineer any investment and look at the risks prior.
Savannah, that's really interesting. And honestly, I think listeners who are planning to invest will find this advice very valuable. And moving on, are people leaning more toward ready properties or off-plan projects these days?
It depends. There's a very healthy mix at the moment. Off-plan will dominate the market, and ready property will cater for the end users or people looking for instant passive income. They both have their pros and cons. If you're buying a ready property, you're already buying it at its peak, because those who invested early have already seen that appreciation. But that's not to say that all off-plan is going to grow just because it's under construction. If you actually look at the data, there's some areas in Dubai where off-plan by the same developer is launching at a higher price than what the ready property is. Now that makes no financial sense, but off-plan dominates because the majority of the market is supported by foreign direct investment. Now, if you understand what the rules are for purchasing overseas, most countries say, like the UK, you can put 5 or 10% down and leverage the rest. You can't do that here because the government don't encourage high leveraging because, one, it's haram, and also they don't want to create market volatility. So foreign direct investors can't just say, I'm going to put 10% down and borrow the rest from the UAE. It doesn't work like that. If you're overseas, if you want to buy a ready property, you have to put 40 to 50% cash down straight away. So off-plan is often favourable for the overseas investors because they can put 10 or 20% down and stagger the rest. It's a lot more cash friendly with their cash flow. So that's why you'll see a lot of people putting or going for the off-plan option as opposed to a ready property, just based on liquidity available.
And is it, a good strategy in today's market?
Yes, off-plan is a good strategy if executed correctly. If you off-plan, I would always recommend in off-plan, you're an opportunity investor. You want to enter into a landscape before the masses when the price is at the lowest price per square foot it will ever be. Now, in order to ascertain if it's the lowest price it will ever be, you need to look at comparable waterfront communities. How much growth have they seen? How does a similar like community compare to what's already a mature community but on the same scale? So we take waterfront, for example. Blue Waters is trading 6,000, 7,000 dirhams upwards PSF. You can have Dubai Islands and Maritime City that are arguably going to be better communities based on what Nakheel are planning on implementing, but they're coming in at around 2,500, 3,500.
And there we see the market evolving.
So you can see where the growth, where that gap in value is, you can position yourself there. And that's where people will start to see the double-digit returns by capitalizing on those low prices. Would you buy an off-plan in a really mature community? No, because developers aggregate their launches and they do forced engineered appreciation. So as the community evolves and develops, you'll see it with Amar, top developer. Amar Beachfront, each launch that they do in their community, they will increase the price per square foot because the developers de-risked, so they can afford to put their prices up. The area is more mature, it's more desirable, there's more eyes on it. So as long as you're positioning yourself...
And there is a lot of hype about their island project, isn't it?
Yes.
Coming up.
Yeah. So there's a lot of hype, and Amar's a fantastic developer. We recommend and we work with them very closely, but doesn't mean we'll recommend every single one of their projects for investment because there might be something better. You can't just go on the basis, when off plan, just based on the name, a brochure. You have to look at the location, where you're entering into. Obviously, the developer we spoke about. Infrastructure. Off-plan infrastructure is such a key part. What is currently in the area for this community and what's coming. Where that growth comes from the first launch to the last launch in the community, you would have had different non-speculative introductions of infrastructure happening there. Is there a metro station coming in there? How much is the government investing in infrastructure surrounding that area? Is it a focus for the government? If it's a focus, why? Is there any commercial coming that's going to support the demand for rental or resale or jobs? Is there hospitals? Is there schools? Every patch of greenery? All of that will have an influence on the price. And that's where you can really see those sharp, aggressive returns when you do an asymmetric risk of the perceived risk of an investment versus the actual fundamentals that are going into an area. If you don't have all of this outlaid and it's all just speculative and you're riding on the fact that a brochure looks great, it carries
all
way
that glitters is not gold at the end of the day.
Exactly. It carries far too much risk. And I
True.
think that's what a lot of agents don't highlight in the market.
That is absolutely right. And it makes sense. Now, we have already discussed that the long-term off-plan properties do work for the investors coming from abroad. But I think a lot of UAE buyers as well are also investing into this. So who is this suitable for?
Off-plan suitable for everyone. Now, we do face, one of the downfalls of the market is actually you get compounded pressure from everywhere. You get international investors and you get local investors and you get existing buyers in the market. And you do face a lot of pressure when you have in-demand launches. No one believes it when you try and explain to a new client overseas that in-demand launches literally sell out in seconds. Literally seconds. So I think it's suited for a mix of people, but it entirely depends on their goals. What could suit someone for off-plan might not suit the person standing next to them. It entirely depends on their goals, their timeframes, and their expectations of the market. I always ask people, what are your expectations of the market?
What are the end goals you're looking for?
Yes, because there's a lot of hype, there's a lot of misinformation, and when you have your expectations up here, it creates an unrealistic working relationship with yourself and a potential client. So I always ask, what are your expectations? What are you looking to achieve?
Exactly. And then also moving on to the decisions that are made on emotional basis as well. Property decisions can be emotional. How do you help clients manage fears or unrealistic expectations? I think this is a very important topic to be discussed on the show today with you.
This is super important. So when you've got an emotional buyer, I think to outlay, always base any decision based on data. So I will often always run numbers, cash flow breakdown, projections. Everyone sees everything in a clear snapshot. Because when you actually outlay the numbers, it switches their mindset from being an emotional buyer to the actual logic of this investment. Does it make sense on paper? And a lot of people get wrapped up into the lifestyle or the community. But if it's an investment, then you need to take away the emotion and you need to look at the numbers. So I think using data, being data driven and being transparent will help you manage your expectations, and always working on a conservative basis. You'd rather your client say, oh, you made me an extra 10% than saying, well, you promised me 15 and now I'm actually down 5%. Always knock 20% off your calculations, even if you think it's a winner.
So practicality is what is required here, and helps people make better decisions when it comes to this.
100%. Always be transparent, and I'm a big believer that always treat people how you'd want to be treated if the shoe was on the other foot, and just work with integrity.
Be fair.
Yeah, be fair.
Yeah.
Because it's a lot of money at stake. It's potentially people's life savings that they're coming. Investing anywhere is a big thing, but investing overseas as well. So you just have to treat it with patience and make sure you're running the numbers and doing your due diligence as an advisor to de-risk your client.
And that will only make the whole process stress-free for the client as well.
Of course, stress-free. And if your client wins, you win. And
exactly,
I'm fortunate position now that most of my client is from referral business. So if you treat, a lot of people have a tunnel vision where it's a quick win. I get a sale, and a lot of people get burnt and they don't speak to the client after. As an advisor, you should be keeping your client after the sale updated with market updates, quarterly reports, annual reports. How did the last year perform? They might not buy from you again,
True.
But you have to earn your money and add value to them long after the sale. So I think just being transparent and consistent will de-risk the client and make them feel more comfortable. You should enjoy the process. I'm a big believer of that.
So it actually goes both ways.
Of course.
And do social media and market hype make your job harder when advising clients?
Yes. There's two things that have just sprung to mind. So both from brokers and from the developer. Expectations from clients can often leave them very confused when they see things on social media or marketing and advertising. We'll do the developer first. Developer can say 1 bedroom launching for 2.1 million. The client comes to you and says, I want something in this project. Well, the 1 bed's 2.5. Well, the developer says they're launching at 2.1. There will only be 1 bedroom on the bottom floor in that whole building of 300 units that is priced at 2.1. And obviously it's a tactic for the developer, the marketing, that's fine. We all know how marketing works, but it leaves a lot of confusion for investors.
And sets wrong expectations as well.
Of course, completely wrong expectations. And it creates confusion, or the client might think, well, why are you telling me a higher price than what I can go from the developer and get it for? So it's just managing expectations on developer tactics, marketing, and that the higher you go, the higher the price, and things like that in a particular project.
And did something like that ever bring you to a point where you had to advise the client not to actually buy or invest in a certain property?
Not necessarily relating to that, but I have advised quite a few clients not to invest. Yeah, I've lost deals on the basis that I've not advised them or told them to hold off. There are periods where I have nothing to recommend. If it doesn't fit within your clients, I'm not going to put you into something that only 50% ticks your boxes. I will wait, and if I know something's coming up in 3 or 4 months and you just have to sit and be patient, then I would tell you to hold off for that. It's not about getting the transaction over the line for myself and the firm that I work at. It's about making sure it's a right fit for the client. A lot of people will just put clients, unfortunately, into developments where there's inventory sat around for months and months. If the inventory sat around, then who's going to buy it from you at the end? If it's the developer can't sell it, then how are you going to? So you do have to say no a lot, but I think that's part of the job. That's being an advisor as opposed to just selling. An advisor will tell you no, they'll tell you why no, and they'll tell you the pros and the cons of any investment you make. And I genuinely believe that's how you retain the trust and the long-term business from a particular client.
That takes a lot of courage, right?
Of course, and you have to be transparent. Karma will get you if you don't operate that way. And the business here is very small. The industry is very big, but word gets around. So you need to be careful with what you're recommending, and you're your own brand. So I think what you recommend is really, really important, and who you work with. A developer or product is an extension of your own business. So yeah.
Absolutely. You know what? It's really refreshing to hear an honest advisor put the client first like that. Because I think a lot of mistakes investors do make is because they end up trusting on these social media ads and, posts that they keep seeing all the time. So I think that approach actually does help them very much.
It has to. There's a lot of misinformation in the market, and as you said, different expectations. So I think if you just demystify the market, explain the process, it helps the investor know that everything that's in your brain will then transfer into theirs, and then they can make an informed decision based on what you can add. And I think that's giving them the most value, purely educational.
Interesting. And how do you think this separates a trusted real estate advisor from just a salesperson?
Operating with integrity, the ability to say no and focusing on the individual's needs as opposed to simply the transaction. The transaction should not cloud your judgment when recommending or working with the client. The whole focus should be on the client's needs, the client's interest, and what their goals are and how you can help them get there and build them a roadmap to get them from A to B. That should be the focus, not a salesperson pushing an agenda, telling you this is why you need this. It's outlaying their goals and working with them to establish what success looks like for them, and then you aid that.
So I think it is the integrity that really does stand out here. And I think listeners will definitely take that on board. And what do you think the UAE market, property market, will look like over the next few years?
I think there's been a very big boom at the moment, and I think we're going to phase out into a maturing market. So continued stability. I believe inevitably some areas will face corrections. We're seeing that already. A lot of people shy away from talking about that because they see it as taboo and they don't want to scare clients away. But as an advisor, you have to say we see corrections all the time. If you look at the data on a daily basis, you'll see the mature communities, they're up and down, up and down.
And it's just a cycle.
Real estate markets are cyclical. It's fortunate that the economy here is performing very, very well and has done for the past few years, that the real estate market's intrinsically linked to that. So there's a nice cushion and fundamentals that are supporting the real estate growth here. But it is cyclical, and anyone who shies away from that and says it's going to continue to go up, there has to be a roof. So I think it will soften and it will become more mature, but that indicates stability, which is what the UAE needs. I know a lot of people are saying they're waiting for a crash, and I think a correction would be healthy because, again, it shows stability. So,
do you see the crash coming?
I think some markets will remain resilient, but I do think there will be corrections, whether that's in a couple of years, in a few years. Depends on how the population continues. If we still have an influx of greenfield investments, foreign direct investments, political stability, obviously the dirham is pegged to the dollar, how it's going over in the West. So there's so many factors and fundamentals that go into it, and no one has a crystal ball, right? But I think
time will tell.
Time will tell, and always focusing on the demand at the end. Don't just focus on the entry. Your exit is just as important because certain properties, if it's in 5 years or 10 years, will remain resilient and some just simply won't. So it's always thinking about, again, mitigating risks and how do you position yourself within these cycles.
Absolutely. And are international buyers still confident about investing in the UAE, especially Dubai, and why?
Yes, so I think a lot of international investors see Dubai as a safe haven for various reasons. You've got the safety here,
The stability.
the quality of life, the weather. A big one for Europeans like us is the no taxes. So I always see Dubai as everything that no one else likes in the world. Dubai thinks we won't have that, we won't have that, we won't have high taxes, we won't have high crime, and they eradicate all of that. And to us Westerners, it's a safe haven because everything that we are potentially lacking at home, we have here. Dubai always had this pull.
Has it all.
Has it all, has its pull. But what you're seeing now in the European countries, and the reason why they're all coming here, is because you're getting push factors. London's crime is at an all-time high. The taxes in European countries are all-time high. The renters' reforms that are being introduced in the Netherlands and the UK. And it's not advantageous to be an investor.
At all.
Why are you going to settle for 3 to 4% rental returns and a high tax bracket when you can get 6 to 8 here and 0% tax? It doesn't make sense for investors in their home countries anymore. And as word spreads and Dubai continues to elevate itself on that global players list, in the tier 1 city being 9th, considering how young it is incredible. I think it will continue to attract foreign direct investment for the foreseeable future, especially with all the reforms that they put in place, like escrows, accrued registration, RERA, the Dubai Land Department.
It's a transparent approach, isn't it?
Transparent and very forward-thinking. Everything's digitalised. In the UK, it's all paperwork, a lot of red tape and a lot of headache. You could literally purchase a property here in the same day. It's very, very quick when you compare the two. So yeah, a lot more easier to carry out transactions and acquisitions here.
And I think that definitely gives confidence to expat buyers listening to you and your advice right now. And it shows the market still has appeal globally.
Yes, it definitely does.
If someone listening today is thinking about buying property this year, what's the first step they should take?
I think the first step is to speak to a few agents. Speak to as many as you can, because you need to find the person who's going to tell you the right advice. You also want to cross-reference their advice, and don't be afraid to question. I actually find it a little bit uncomfortable when clients don't ask me any questions, because I'm thinking, you're going to be putting millions and millions into this region.
Your hard-earned money.
Yeah,
Right.
and you're not asking any questions. It makes you feel a bit uncomfortable sometimes. So ask as many questions as you need to. Cross-reference, qualify the person you're working with so you know that you're getting genuine, sound, regulated advice. That would be my first thing, because going direct to a developer, again, also carries risk. It's always best to have an unbiased advisor, because the developers only have one product to sell. They'll always push their remaining inventory, or they only know their own stock. They won't give you an opinion on something better next door. So I'd always find an agent, and always know that you have good working synergy. It's not that I work for a client or they work for me. It's a collaboration. It's a long-term collaboration. And I think finding someone that you actually enjoy working with and who's going to help you build wealth in a city where you're able to do so a lot quicker than others is the main starting point. And just do a lot of research. Watch YouTube videos, podcasts, just immerse yourself into it, and definitely come to Dubai if you're going to invest and get your boots on the ground.
Savannah, it's been a pleasure having you on the show. Those tips and tricks that you've shared are actually so valuable and incredible, I must say, practical at the same time. And I hope that our listeners feel inspired to take their next steps in property with confidence here in the UAE. I thank you so much for joining us today.
Thank you so much for
and
having
I can't wait to have you back on the show
me. I
soon.
can't wait to. Thank you.
Thanks. So that brings us to the end of today's Midday Majlis. I'll be back with more engaging conversations like today and interesting discussions. Don't forget to like and subscribe to Mirror Business FM. Until next time, this is Sahar Mushtaq signing off.